Hey everybody, Real Estate Ninja here. I hope you're having a great day. I've got a story out of Yahoo and it pertains to Canada, but I want you to think about how this can come here, okay? Very important. It says the CRA is already challenging real estate transactions ahead of new anti-flipping laws. Or rules, I apologize. Canada's new anti-flipping rules for residential real estate are scheduled to come in force on January 1st, 2023, and are designed to reduce speculative demand in the marketplace and help to cool excessive price growth. The new tax law will disallow the use of the principal residence exemption to shelter the capital gain realized on the sale of your home if you've owned it for less than 12 months, allowing for certain exemptions such as death, disability, separation, and work relocation. Instead, the gain will be 100% taxable as business income. So think about that. They are essentially now locking people down, regardless of the speculation part. Think about this. You are going to be locked down for a minimum of a year if you buy a principal residence, because you now fear that if you sell the house, any gain realized will be taxed as business income, not just personal gains. Think about that. Business income gains come with additional taxes, all right? So this is even worse than just saying, hey, within the first year, you're still gonna get taxed, not gonna be tax-free, all right? So that's one important thing. And I want you to thinking, in America, could this come? Because a lot of people get sold this and they go, yeah, do this, you know, because those house flippers are ruining it for us because we're just trying to buy a house. But what they're doing is they're just taxing you. It's just another tax. So think about it in America and let me know in the comment section if you think this could happen here. It says, but the Canadian Revenue Agency isn't waiting around for this new legislation to come into force. It's currently challenging perceived real estate flips through the court system with mixed results depending on the facts of the case. The most recent example involved a Toronto homeowner who went to tax court to challenge the CRA's denial of her principal residence claim. The taxpayer was reassessed by the CRA for her 2011, 2015, and 2016 taxation years in connection with the sale of 4 properties she owned at various times during that period. But it was the 2011 sale of her Toronto property that was the most contentious, because the CRA assessed the taxpayer beyond the normal 3-year reassessment period and imposed a gross negligence penalty for that year. Guys, I'm not going to continue reading this. There is one spot that I will tell you. Here, hold on, just let me get to it real quick. All right, cool. This can happen here. The reason why is because the government is greedy for taxes. They keep raising taxes, and this story of home ownership is too expensive. Even though we know in America it's because not only speculation and people running the price up, but because the Federal Reserve raising interest rates, right? So it would be very easy to think that this could actually come into America, and then a lot of people would jump on bandwagon and the media could push it out and go, yeah, attack those, get those, the tax money that we so desperately need from the grubby, greedy hands of the house flippers, right? Not the greedy, grubby hands of the politicians that take it and then blow your money in all kinds of different ways. No, let's go after the home flippers, right? So could you, in the comments, I want to see your comments. Could you see this coming to America? I believe you can. And these are things that you need to start thinking about so you're not completely shocked. And then, use this information to change the way you deal with your portfolio of homes or rentals, okay? Because this could come, it could come quick, because as our economy continues to fail, the government's going to find new creative ways to take your money. And they are watching our brothers to the north very, very closely. As a matter of fact, if that trucker convoy situation and the weapons grab didn't get your attention, watching our leadership out there speaking praises about their government and all the great things they're doing, which was taking away people's rights. Think about this. They are watching things like this with new tax rules changing very closely. Okay, so I want people to understand that. Now it says right here, So in the end, this story talks about the lady's 2011 taxable income situation with the real estate, right? And there's a judge that's ruling on it. And it says, right here, The judge then turned to the question as whether there was a misrepresentation on her 2011 return, owing to neglect, carelessness, or willful default. In not reporting the sale of the home, the judge found the taxpayer lacked any details and material to show responsibility that she may have been correct in her filing position. So the CRA was within its right to reopen and reassess the 2011 tax year even beyond the normal reassessment period. Okay, the reason why I want to bring that up is because the judge in the case said that even though it appeared that the person was not wrong in the way they filed their taxes, they were negligent in how they went about putting out the facts at a certain time point, and then that allowed the CRA to go in and reassess past issues. All right, so this is what's very important, and the reason why I want to read that is because think about everything you're doing today, how you handle your real estate transactions, your taxable situations, things like that, how you're recording, how long you lived in the property, how you're doing your documentation with your utility bills. If you guys know it, if you're in the business, you know what I'm talking about. You need to have rock solid numbers and evidence to go along with how you're dealing with your taxes, right? Because you may get away with it today, but in the future, there may be a judge. You may be in this position where the taxman is coming after you for a tax rule that changed in the future, and they're coming back to reassess you way back in the past. You need to be thinking about this. Keep your noses clean. Keep your noses to the grindstone and do everything above board, because as tax rules change, the taxman's going to be coming looking for the boogeyman or someone they can attack. And quite frankly, I believe that is you, the real estate investor. All right, guys, with that being said, I thank you so much for watching. I'm going to link this story below. With that being said, the Real Estate Ninja is out.